If so, do you have one? If not, are you considering? And then the optional questions at the bottom are, specific to gender and race and household income. We have, as of this morning, received about 1,400 of those surveys back. And that may not sound like a lot, but from a statistical standpoint, that is significant because we just needed a minimum of 385 for this to be considered statistically significant, which means having about a 95% confidence level that this is a pretty good representation of these two groups. And why this is important is that helping us go forward with our marketing efforts, we'll have a better understanding of what messaging we need to do to appeal to these two very distinct audiences, because obviously messages that appeal to new parents isn't going to be the same message that appeals to grandparents. So we'll end this survey with a drawing. That the incentive for people to participate in filling out a survey is we have a $100 Amazon gift card. And so we will draw for that in mid-April. And what's kind of been a happy accident, and Chris, we can get rid of the survey now. What's kind of been a happy accident with all of this is, you can imagine, I'm getting my email and our office phone number is linked to this survey. So quite a few people are emailing and saying, is this legit? Is this a real survey? Are you a robot? And I've started finding ways to turn those into kind of lemonade moments. So I have a direct, I have a live one on the line, but it gives me an opportunity to introduce myself and say, yes, this is legitimate. And, thank you for your interest. And so I just feel like I didn't expect that, but it's another way to help communicate and maybe give some level of comfort to people about the 529 plan. So we'll see what our results are. But all this is going to help us. Stacy and I have started working toward the goal of a 5-year plan. So like a 3 to 5 year plan for the Arkansas 529. So at our next board meeting, we will share with you all the results of that survey, but we're just very excited about it. Any questions before I move on? Okay. The next thing I want to bring up, and Dave will talk about this a little bit later on in his report. I don't know if you remember at our last board meeting, we mentioned that a few companies had kind of reached out to us about adding the Arkansas 529 to their app platform. And one of those was a company called Suchi. And it's a crowdfunding app that allows, parents, families, whomever, to contribute to a child's 529 account. And some of you may remember Emma, my predecessor, and she actually works for Suchi now, and had kind of approached Grant about a pilot program that they wanted to her company wanted to test here in Arkansas, but I think with a goal maybe of, going nationwide with it. But it is a way it's a partnership with, in this case, Lighthouse Charter School in North Little Rock. And Suchi has secured funds, in essence, to seed accounts for the entire student body at this school. And so they will seed Arkansas 529 accounts through private funds that they've secured. And obviously they needed to bring us into this because they wanted, in essence, to set up a scenario where Suchi would act as the advisor. And then Dave's group had to work diligently to enable the app transition to work and to work effectively. So in the end, the best way to kind of think about how we figured this out is to think of the arrangement as like an advisor sold plan, but with we were able to work out a deal where we waived that minimum fee, and Suchi will act as the advisor. And I think, like I said, Dave can tell us a little bit more, but what this does is it opens up the door for us to offer this type of support to other companies that may want to come to us because we've got the systems in place behind the scenes.
Yep. Yeah, that's correct, Fran. And just to add a little bit, Suchi is a registered, they're an RIA, just like all the other RIAs that are in the iShares plan. And the iShares plan was a great fit for them because of the way that the advisor works. And David, who started this company, has been around for a long time, and you could probably find him on the internet. He's well known. So we waived the minimum. It's a $500 minimum initial deposit for the iShares plan. We waived that, and what we also will be doing is we will be receiving paper applications from Suchi. So they basically have duplicated the iShares enrollment form onto their app. And once it's completed, they'll print it out with an electronic signature from the account owner and then send it into us via mail. So that's the way we're receiving them. We think that it should work seamlessly. It should work just like any other RIA is set up in the system. So we're looking forward to seeing those come in.
When are they, do you know kind of when that will happen, like when the launch and the announcement will come?
The last email from David said they had to do a little bit of tech work on their side. My thought is it could happen as early as next week. The one thing that I did encourage them was if they could hold off just a second. We're updating the application because we had a slight change in a portfolio. So we're hoping to have them use that with the updated portfolio name, as opposed to having to go through the process of swapping out the application on their app. So I haven't heard anything else since the last email last week about them needing to do some tech work on their side as well.
Okay. Any questions from the group about that?
Well, I would say just a comment that it's an exciting time to continue to help to grow as I approach somewhat of only about a year and a half left in office. You know, again, this program's been the apple of my eye. So continued, improvement, and to leave it in such fantastic shape for the next treasurer is certainly a goal of mine.
Oh, I'm very encouraged, and what's also interesting was shortly around the same time that Suchi reached out to us, we did get a call from the Little Rock Mayor's office from Jay Barth, where the conversations have kind of gone to the next level with the idea of the city of Little Rock, or the Little Rock School District. Well, let me back up. The city of Little Rock's, it's called the Early Childhood Education Initiative. And they are considering the idea of seeding and starting 529 accounts for every kindergarten student in the Little Rock School District. So no movement on that, but Grant and I had a very lengthy conversation with them about what that would look like, how we would need to step that up. And of course, it opens up the door again, for more conversations about education and financial planning. And so I think kind of in line with what the treasurer said, it's yet another way that people are looking for public-private partnerships to kind of address all these issues going forward. So I think we're going to start seeing more partnerships like this.
Good. So Fran, thank you very much. Dave, thank you for those updates. I think we're looking now for checks. Am I wrong?
Just the legislative.
I'm sorry, Fran, the legislative update.
Yeah, no, that's okay. That's okay. I'm actually going to turn it over Grant to kind of give us an update on the House bill that was filed in February.
So we're only running one bill related to the 529 this session. Honestly, we've gone into the session just needing to do a technical update to get us in line with the Secure Act, which would afford apprenticeships and student loan repayment to be an eligible expense out of the 529 account. But in conversations, the Republican Women Caucus were very excited about this program and wanted to assist us to bring some new attention and some new awareness to it. So they actually approached us about changing the name. So the legislation is now being, it now includes a name change. So it will not be the Arkansas Tax Deferred Tuition Savings Program. It will be the Brighter Future Fund Plan, is what the name that they landed on and is in the legislation. We are at the Revenue House Committee. They are holding all bills that have a fiscal impact, and we'll run those once we kind of get further into the budgeting process. There's no opposition to this. The impact was $28,000, and the committee was actually joking that the state of Arkansas probably could absorb $28,000 and it would be okay. So I think we're good to go. It's just now getting through the process, and we'll just keep updating everybody as we kind of continue to move through the voting and the legislative movement. But hopefully here in the next couple of weeks, we'll be able to start getting this moving and get it out of committee and over onto the Senate side.
Thank you, Fran, for that update.
You're welcome.
Thank you. Yeah. Any questions about that? Any questions from anybody?
Nope.
Hearing none. Now am I ready to move on? So we need to look at the approval for checks and invoices.
Yes, you all received in your packet the list of checks and invoices to be paid, and just wanted to get that approved.
All right. I move for approval of the checks and invoices presented.
I have a motion to approve. Do I hear a second?
Second.
I have a second. Any further discussion? Thank you very much. Motion carries. And we're moving on now to Mr. John Peace. John, good morning. Have we
You're
lost? We lost John.
He's just on mute.
Okay, good morning. I'm unmuted now.
Okay, good, John.
All right, thanks. On the budget report, on the income side, we're ahead of budget, probably because of the market run-up, I would imagine. We budgeted income of $540,000 for the fiscal year that will end in June. At this rate, we'll probably be slightly above $600,000 in income. On the expense side, all of the expense items are under budget at this point, except for one item, scholarships and grants. We didn't have that in the budget, and we spent about $5,300 on those. As of the end of February, we had a little over $89,000 in the Southern Bank Corp. That's our regular checking account, and $120,000 in the First Security Bank account. As of yesterday, the bank balance at Southern Bank Corp. Was about $129,000. So we're in the black. Be happy to answer any questions.
Okay, hearing no questions, we'll move on to Greg at Landmark.
Thank you. Hope everybody's having a good day today. So me and Patty came on back in November, and we presented the audits for the June 30, 2019, and then also went over the engagement letter. So instead of going over in detail the June 30, 2020 financial statements, the audited financial statements, I was going to kind of go over high level the audit communication letter. In addition, we put together a 5-year kind of trend analysis of both the gift and iShares plan to show kind of their growth over the past 5 years. So I'm going to share my screen. And if anybody wants me to go over anything on the gift and iShares financial statements, then I'll be happy to go over those.
Hearing no questions in.
He's sharing his screen.
Oh, I'm sorry. Go ahead, Greg.
It says host disabled participant screen sharing.
Hey, Chris, you're going to have to give him permission.
Okay, give me just a second. I gotta try to figure out how to do that. Oh, okay. There we go. You should have it now, Greg.
I do, thank you. Okay. All right, does everybody see the letter?
Yeah.
Okay. So this is required by standards for us to communicate to the committee. It's kind of like a cliff notes of how the audit went in a nutshell. So it talks about our responsibility. We're supposed to audit in accordance with standards. Both gift and iShares were both clean audits. Even with COVID, we were able to communicate with the census throughout the year, with Vanguard throughout the year, with BlackRock throughout the year. We did our walkthroughs over Zoom, which was very interesting, but we found no issues with that, no compliance issues. And so it was really, really clean. So we wanted to point out that in the engagement letter that we presented in November, we said that we would have the audited financial statements to you by December 31st. Well, it is March the 16th. So we apologize for the slight delay. And so in this section, we mentioned that it was slightly delayed. We had some deadlines that kind of bled over, and with COVID, everything was kind of slightly delayed. So we apologize for that. The next section, we talk about compliance with all ethics requirements regarding independence. We are fully independent in relation to the plans. We performed some routine accounting entries to convert both gift and iShares from a trade date to settlement date. And also we trued up contributions and withdrawals to be true contributions withdrawals, which means we eliminated exchanges and transfers and share conversions to show you the true money coming in, the true money leaving. But at the end of the day, a census reviewed and accepted all of our entries in the financial statements. The next couple pages relates to like any significant accounting policies. They're found in note 2. It also talks about your estimates, the significant accounting estimates, which is the fair value of investments. Note 3 to the final statements is a big long investment footnote, so that's why that's in there. Talks about basic financial statement disclosures. Note 3 again is related to investments and all the required disclosures about that. Note 4 discloses the fees that a census, BlackRock or Vanguard and the committee received. And note 5 discloses uncertainties surrounding the COVID pandemic. And, we're still not sure of the impact, if any, that's going to affect the plans. We encountered no significant difficulties in dealing with management and performing or completing our audit. We had no uncorrected misstatements. In fact, we did not find any misstatements. The only entries that were made were, again, related to routine accounting entries. There were no disagreements with management. We did not consult with any other accountants during the audits of both gift and iShares. These next few sections talk about that, we really don't provide any assurance on the information in the management's discussion analysis and the supplementary schedules in the back. And the last section pretty much states that they're like underlying fund fees for the underlying mutual funds, the operating account, the operating fund of the committee, and the marketing commitment. These are out there. There's money going back and forth between related parties, but they are not paid from plan assets. and therefore they were out of our scope of the audits, and we did not perform any procedures over those. So again, clean audit for both gift and iShares, and the iShares letter reads pretty much identical to this one. The last thing I want to go over is, like I said, kind of a financial trend from June 30, 16 to June 30, 2020, and the substantial growth for both of these plans. If you look at the first part, net position, it went from 334 million to 470 million over the 5 years, which is a $136 million increase, or 41%. Same thing goes for iShares. They increased almost 181 million over 5 years, or 55%, which is great growth. Contributions increased year over year for gift, and increased 57% from 2016 to 2020. iShares increased overall for the 5 years, almost $9.5 million, or 18%. There was a slight decrease from 2019 to 2020, and there was a few $1 million of rollover contributions that decreased from last year. We kind of looked into that. We didn't see any outliers or any trends that we felt like needed to be pointed out. Withdrawals increased year over year for gift. Again, $17.8 million, or 76%. And each year from 2016 to 2020, it was at least 95% for qualified withdrawals. So although your withdrawals are increasing, they're still using it for what they're saving for. So it's really good news. Same thing for iShares. Even though there was a pretty substantial increase from 2019 to 2020, I will say that in 2019, there was a pretty big decrease in rollover withdrawals. Again, we performed procedures last year. There was nothing that really jumped out. This year, it kind of rebounded to normal, which is why you see that really large increase. But nothing that we feel is out of the ordinary. Administrative fees, as you can see, increased only 237,000, or 12%, from 2016 to 2020. There was a large increase in 2016, a large fee decrease, which kind of limited the amount of fees that were charged. For iShares, you say it went from 1.1 million to $2 million. It only increased about $1 million from 16 to 20. And lastly, both gift and iShares, they both had tremendous growth in active accounts. They increased year over year for both of them. A 26% increase over the 5 years, and a 60% increase for iShares. So gift and iShares, both really, really good looking plans, increase over the 5 years, which is really impressive. So that's all I have for today. So if anybody has any questions, I'll be happy to answer them.
Okay, thank you. Hearing no questions for Greg. Dave, from the census, you're up.
Hey, Dave, I think you're on mute.
Do we have Dave?
Yeah, sorry about that. I was on mute. So let me reshare.
You're up.
Yep, absolutely. Can you guys hear me now?
Yes.
Sorry about the technical. My Florida State degree doesn't allow me to perform real high technical functions here. So anyway, building on Greg's comments, the assets just continue to go for the gift plan. So as of the end of February, you were over 536 million. As of close of business yesterday, the gift plan was almost at 546 million. So I know a lot of that is market activity. You love it when the charts look like this, but it's an amazing run. By the way, your total trust assets is closing in on $1.2 billion in the trust. So that's a nice round number. When we look at contributions, as Greg said, we're seeing increases, 2020 contributions, and this is calendar year, so this isn't fiscal year, but 2020 contributions for the calendar year closing in on 55 million. That's a 6.5% increase over calendar year 2019. Withdrawals are slightly up as well. We did see withdrawals of 41.3 versus 40.2, but people are using them for the reasons that they're, the plan was put in place, and that is qualified withdrawals, payments to universities. So your net inflows for the calendar year wound up being 13.57 million. That's a 20.6% increase over calendar year 2019. And funded accounts, these lines are like parallel to each other. It's amazing how consistent this growth is. But funded accounts stand at 31,636 for the gift plan. Your average fund account balance is now increased to just under 17,000. It's a little bit in line. There's a little bit of market activity and withdrawal activity at the end of the year, just like there is every year, but is rebounded back to, like I said, just under 17,000 on the average account balance. But when we look at it by beneficiary, those folks who are getting ready to go off to college have higher account balances. So so we're just under 23,000 for the average account balance for those kids who are juniors and seniors in high school. And then quickly on iShares, I don't want to steal any of John's thunder, but 604 million at the end of February. And that plan is now, as of close of business yesterday, basically 623 million in assets, 14,734 funded accounts, average account balance. I don't know how people can afford to go to college off of this average account balance, $41,000. It's amazing. One of the higher averages that we have across the entire complex. And then quickly on UGift and UPromise rewards, this is at the end of February. For UGift, the Arkansas Gift Plan has received over 7.7 million in contributions from friends and families. The iShares plan has received almost 2.5 million. Arkansas Gift has received over 13,000 in gifting, where the iShares plan is trailing a little bit behind at a little over 2,300. The average gift plan, though, the average gift amount for the gift plan is 587. The average gift amount for the iShares plan is over $1,000. And then quickly on UPromise rewards, we've seen total sweeps so far as of the last quarter at almost 1.9 million in free money. And again, we have about 3,500 UPromise members who are linked. So that ends my comments. Any questions on it?
No, Dave, I think you've done a pretty good job of making our day.
That's an awesome number. You guys should be incredibly proud.
Any questions for Dave? Well, Julia, we'll just move right on to you then.
Okay, thank you.
Oh, let me stop mine. Okay. Can you share? Just wanted to, I stopped sharing. I just want to make sure you're able to share now.
Can you see my deck? Can everyone see my deck?
Yep.
Okay,
we
great.
can.
So thanks for including us today. I'm Julia Ward. I'm just going to start with a brief review of your existing age-based portfolios. So as you know, we constantly evaluate these age-based portfolios, and we run multiple iterative qualitative and quantitative processes to make sure that they are constantly delivering the correct and appropriate balance of risk return. So despite our slightly lower 10-year return forecasts and the consequent slightly lower wealth accumulation expectations that we have, we still feel that these global portfolios will continue to outperform domestic portfolios and that they will deliver the appropriate risk return profiles for education savers. Hence, we're making no changes to these portfolios and don't anticipate making any changes to the portfolios. And we are confident that they continue to be a prudent and effective savings vehicle for education savers. With respect to our new option, an alternative, our target enrollment portfolios, I think we briefly discussed these the last time we met. Again, these portfolios are the result of two consequent events at Vanguard. Over the last few years, we developed a goal-based advice methodology, a new advice methodology, and at the same time, we made significant enhancements to our glide path methodology. We included additional utility factors in addition to retirement. So we were able to build a new progressive smoothed glide path where we enhanced the optimization of risk return results and wealth outcomes, and we were able to deliver it to the market cost effectively. So we introduced these portfolios in 2020 to our clients. The distinct advantage from an account owner perspective with respect to a progressive glide path is it's a much easier, simpler choice for the constituent, and it's more transparent. There's one portfolio which they select that's based on the age of their beneficiary, and they stay in that same portfolio for the life of their savings cycle. So there are certainly account owner benefits as well as some moderate investment benefits to the progressive glide paths. At this point, the Vanguard plan has converted in November of 2020. We have 2 more states that will be converting in 2021. We have 4 who have made formal presentations to their boards and committees, and we're expecting votes on those as we proceed through 2021. Are there any questions on your existing age-based or our new option? Again, this is not our formal recommendation from Vanguard. This is just a new option that we're offering as an alternative to the age-based. Are there any questions on that? All right, then I just wanted to give you a brief look at our market and economic outlook. Certainly, this is colored by COVID 2020, the year of COVID, which was absolutely extraordinary in every sense. I mean, certainly historic volatility and historically low interest rates. So from a fourth quarter perspective, we continued to see growth outperform value. Although we have seen some rotation out of growth into value as we move into 2021, but large cap outperformed small cap, growth outperformed value, and emerging outperformed developed markets in the international space, although the US equities continued to outperform international in general. And on the fixed income side, let me talk to sectors first, excuse me. With respect to sector performance, we continue to see huge divergence in sectors in the economy. Obviously, those industries which are dependent on consumer-facing businesses suffered and were punished by COVID. Those that were not were rewarded. So we continue to see that wide divergence in sector performance throughout the end of 2020. The interest rate environment, bonds continued to deliver strong performance. The Fed remained with low rates, and we expect this benign rate environment to persist into 2021. We do expect inflation to meet target and maybe spike mid-year in 2021, but thereafter, again, we still expect the rate environment to remain fairly benign. I did want to share just a little bit about the context of COVID, because how we manage through COVID in 2021 is going to dictate how fast we recover in 2021. So there are 2 basic factors that are going to drive the speed of the recovery this year. One is the immunity gap, the other is the reluctance gap. The immunity gap is really the difference between herd immunity and the percentage of the population that will acquire immunity either through exposure or vaccination. Now, herd immunity is just that where you reach that percentage in the population where the virus can no longer find acceptable hosts. And it's at that point, that sweet spot, where the virus starts to retire and recede. For COVID-19, that's been determined to be around 65%. So the immunity gap is just that difference between the 65% of the population and then the percent of the population that's able to acquire immunity. As that gap contracts, the speed of the recovery will increase. Same thing with another factor, which we call the reluctance gap. And that's just the percentage of people in the population who are reluctant or afraid to get the vaccine. And as that contracts, as that number contracts, the speed of the recovery will increase. We had mapped out for 2021 sort of 3 different scenarios, and we're already seeing some rotation into our base case and perhaps upside case scenarios. All of these are a reflection of the speed of the recovery, addressing how quickly we were able to deliver the vaccine and that these vaccines are effective, the impact, how quickly restrictions on business activity and social engagement are removed, that the consequent impact on unemployment, and then inflation rates and growth. So our downside scenario was, poor distribution of vaccines, continued restrictions on business and social engagement, no improvement in unemployment, and inflation not reaching target by the end of the year. Our base case, where we applied a 60% probability, and maybe more now, again, we're able to reach immunity by the end of the year. Social and business activities return to normal by the end of the year. We see improvements in unemployment, and inflation gets close to target 2% by the end of the year. Our upside case, which we may actually capture, we gave a 30% probability to, and that's where we're able to accelerate all these processes. So we'll reach immunity by mid-year, business activity and social engagement back to normal by mid-year. We may even reach full employment by the end of the year, and inflation may exceed target at some point during 2021. As I said, our projections for inflation are where we may see a spike mid-year. So we're certainly looking at base case and perhaps maybe even getting closer to our upside scenario based on current first quarter. I just wanted to also share our outlook for 2021 with respect to U.S. and international equities and fixed income. So our 10-year return outlooks for U.S. equities are going to be between 3.7 and 5.7% on a 10-year return outlook. For international equities, we're slightly higher at 7 to 9%. And for the fixed income side, both domestic and international fixed income, we're really looking to range between 0.75 and 1.75%. So slightly muted long-term expectations for fixed income and equity returns. Any questions on that? All right, then finally, I just wanted to talk about your fourth quarter performance with your age-based portfolios. Overall, I think we have seen your portfolios perform as expected and fairly tightly track their composite benchmarks. However, I do need to point out with respect to the equity-heavy portfolios, for instance, the first two listed here, aggressive growth and blended aggressive growth as an example, these portfolios did experience some performance differential. And even if we account for the expense ratio, take that out, you'll see from a one-year return perspective, we still had some fairly significant differential in performance. And this really redounds to rebalancing. Given the extraordinary volatility in the end of Q1 and beginning of Q2, we were forced to rebalance these portfolios back to their target allocations much more frequently than normal. And not only that, but we could not rely on cash flows or contributions into the plan to do that. We had to go into the open market and execute transactions. And the frequency of this and the cost involved did create some performance drag. So you'll see that some, from a one-year return perspective, we did see some significant differential in the equity-heavy portfolios. However, if you look slightly closer in, 1 month and 3 month returns look like they're reverting back to a more normal performance with respect to tracking their composites. And we expect this to continue and that these portfolios will perform as expected as we move through 2021. Those are my comments. Are there any questions at all for me, for Vanguard?
Okay, well, hearing no questions, Julia, thank you so very much. John Park, we welcome you to the comment section.
Good to see everybody. I am going to share my screen. Okay, can everybody hear me?
Yes. Yes.
All right, awesome. I am going to jump to this slide. The only change in personnel that I wanted to point out was that on the investment management side, Matt O'Hara had been head of the team that sets the glide path for Arkansas for the iShares plan for a number of years. Chris Chung recently got promoted to managing director, and he's going to take over management of that team, and he is going to be responsible for setting not only 529 glide path at BlackRock, but also just generally across our whole Life Path suite, which is our retirement target date franchise as well. So Chris reported to Matt previously, and really has been responsible for doing much of the work around setting the glide path for the college savings space anyway. So it's really not much of a change, but just wanted to point that out. Skipping to this slide. As Dave pointed out, the plan continues to grow at a pretty good pace, obviously, buoyed by market returns overall. 2020, we had that huge dip when the COVID lockdown started, but the markets rebounded extremely strongly. And overall, we ended up in a 15% increased position from the end of 2019. And obviously the markets have been relatively strong as well, as Julia mentioned, with a huge amount of volatility. But the plan as it stands today is close to 605 million. So we're pretty excited about that. And particularly in Arkansas, we've seen a tremendous amount of growth, obviously helped by the 529 legislation that was passed a couple of years ago, but we've seen a lot of exciting developments just within the state. So for the calendar year ending in December of 2020, we saw 21% increased growth of assets within just the Arkansas resident assets, which is obviously outpacing the plan just generally. Firms pretty much remained constant. We had one firm sort of shrink in terms of total number due to consolidation, so essentially flat. The number of financial advisors selling the plan within the state of Arkansas increased 14%. Number of accounts increased 13%, and the average account size has gone up 10% in the state of Arkansas. So we're really excited about that. And more importantly, we also saw the footprint grow in terms of some of the firms, some of the larger firms to start selling the plan within the state. So you see Cetera there in green, Equitable, Goldman Sachs, and Stifel, among all of the other plans that are offering the iShares plan within the state. So we're really excited about that. The footprint continues to grow. The messaging within the state continues to grow, and advisors are adopting it on an increasing basis. So we're excited there. Just in general, I think everybody has heard the term maybe that we had a K-shaped recovery in 2020, and really that has proven to be true. Most of the work from home economy has been okay. They can continue to get paid, stay home, save a bit more, while the service sector continues to suffer due to the lockdown. But what that means for the 529 industry just broadly is that, people who had the resources to save before have been saving at an even higher clip. So the US savings rate overall has increased, but really that's mainly due to the half of the population that's been able to continue to work from home mostly and collect an income and just save because they can't really spend it. By traveling or going out or what have you. So as what that means for the college savings space is that overall, the industry has grown a lot in terms of savings, just like the rest of the savings, universe. So hopefully, we get continued performance from the markets, and that continues to be, a good bonus for us. And we'll see what 2021 holds. But obviously, as we heard just earlier, that overall, a lot of it has to do with COVID, and increasingly, the governmental response and what happens from a fiscal and monetary policy perspective going forward. So that's really about it for me.
Any questions for John? Certainly. Thank you, John, for that great report. Fran, you have some new business?
Yeah, well, actually the only, I guess it's new business, is I just wanted to kind of put out to the group a potential date for our next meeting, just knowing, that we're getting into the summer months, whatever that looks like for people. We were considering Tuesday, June 8th. So I don't know, don't need a show of hands today, but maybe offline, those of you who know that won't work for you, just let us know. Otherwise, that's probably what we'll proceed with trying to schedule.
Thank you, Fran. Well, I can tell y'all as a part of the team, and we have a wonderful team, everybody included, certainly puts a little pep in my step today hearing such wonderful news. And I think that's what we've heard. My daughter's always said it's not bragging if it's fact. And quite frankly, our program looks like it's in excellent shape. and set to grow even more. So it will always put a tremendous smile on my face. Again, when we talk about being able to help our children here in Arkansas further their education. So without further ado, are there any closing comments? Anything else? I'm sure everybody's ready to move on. Do what, Stacey? Make a motion to dismiss. Is that right? Yeah. Close the meeting, dismiss the meeting, end the meeting. So I have a motion on the floor. Second.
I'll second that.
Y'all have a great day, and thank y'all so very much. Bye-bye.
Thanks.
Bye.
Bye.